When facing tough financial times, one big worry is often about keeping the things that matter most, especially those tied to a loan, like your car or your home. When it comes to Chapter 7 bankruptcy and your secured loans, the answer is yes, it definitely affects them, but not always in the way you might expect. Unlike unsecured debts, a secured loan is backed by specific collateral, like a house or a car, which gives the lender a special claim to that property. The core reason for this difference lies in the concept of a lien. When you take out a secured loan, you grant the lender a lien on your property. This means that even if the underlying debt is discharged in a Chapter 7 bankruptcy, the lien itself often remains attached to the asset. So, while you might no longer be personally responsible for paying the loan, the lender can still take back the collateral if payments stop. You generally have three main options for dealing with secured property in Chapter 7: reaffirm the debt, redeem the property, or surrender it. To make the best decision for your situation, it is important to carefully evaluate each of your options. First, you can choose to reaffirm the debt, which means signing a new agreement with the lender to continue making payments and keep the property. This is like agreeing that the bankruptcy discharge does not apply to this specific loan. Second, you might redeem the property by paying the lender its current market value in one lump sum, allowing you to keep it free and clear. Third, you can surrender the property, returning it to the lender, and then the debt associated with it will be fully discharged. The bankruptcy process offers a temporary protection known as the automatic stay, which pauses collection efforts, including repossessions. However, secured creditors can ask the court to lift the stay if you are not making payments or if you do not communicate your intentions regarding the collateral. Reaffirmation agreements requiring court approval and are generally only approved if the judge believes it is in your best interest and you can afford the payments. Redemption, while sounding good, often requires a significant amount of cash, which can be a hurdle for many people in bankruptcy. Understanding these choices and their implications is key to navigating Chapter 7 successfully. By knowing your options for reaffirming, redeeming, or surrendering your secured property, you can make informed decisions that help you either hold onto valuable assets or effectively releases yourself from burdensome debt obligations.